Hello and welcome back. In this video, we're going to be talking about repaying home loans, right? And we're going to talk about one, understanding sort of the physical structure of what repaying a home loan looks like. You can already see a graph below. And the other thing that we're going to talk about is lots of little hidden fees that sort of come into a home loan that, depending on the types of contracts we get, we need to understand because it's not necessarily always upfront. So we want to look at upfront costs. Okay, we want to look at everything that sort of pops into it. Okay, so we're going to look at a few different things sort of as we go along. Okay, so let's jump into it and have a little bit of a look at everything. Okay, so in example one, the graph below talks about the progress of a $300,000 loan at 4.9% per annum. Okay, reducible interest over 15 years for monthly and fortnightly repayments. Okay, so you'll notice that we're given here, this orange line is our monthly repayments. Okay, and it talks about the value of our loan over time, over a 15-year period. And then the blue line here, okay, is for fortnightly repayments. And you'll notice that we pay things off a little bit faster. Okay, all right. So you'll also notice as well that over time we seem to be paying things off faster. And that's essentially because we're knocking off bigger chunks of our principal that we owe on the loan, and it's not getting the chance to build up as much after each repayment because there's not as much left on the loan to generate interest. Okay, we sort of talked about this structure and sort of how it starts off a little bit slow and then it gets a little bit faster. Okay, it's almost like a reverse compound interest curve. Okay, so there's a lot going on in these particular things, right? So you can see going along here on the side, we've got our principal owing, so how much we owe over the remainder of the loan. And going along the bottom here on our horizontal axis, we have the term of the loan, our time. Okay, so the first question that we're asked for part A is how much sooner can you repay the loan by making fortnightly repayments? Okay. Now, what we can do to sort of understand what's going on there is we can just look at the difference between how quickly we repay off in terms of our time compared to monthly and fortnightly. All right. And so for part A, you'll notice it takes us 15 years for monthly repayments, but 11 years for fortnightly repayments. So if we're making fortnightly repayments, okay, we can actually pay it off 4 years faster. Okay, all right. And again, that often comes down to the fact that we're repaying it off. Well, if we keep the same repayments and we're paying fortnightly, then we pay it off much, much faster. All right. But it often comes down to the fact that we are repaying more and more often before they have a chance to calculate interest. Okay, so we can knock the loan down faster. Particularly across a big loan term, that can make a significant difference in terms of how quickly you actually pay it off. Okay. All right. So looking at the next question, it says part B, after how many years was the principal of $100,000 owing if repayments were made? I, monthly, and for part two, fortnightly. Okay. So for part B, we want to look at after how many years was the principal of $100,000 owing. Okay, so to do that, we need to look right at our vertical axis of our graph just here. Okay, and we want to find where it intersects. If we were to draw a line from $100,000, we want to find where it intersects with our two curves, right? So we basically want to draw a line directly across, okay, until we meet both of our curves, okay? So for the first one, it asks for monthly. So you'll notice when we intersect our curve just here, okay, and we draw a line directly down to our horizontal axes, after 11 years, we'll have a principal of $100,000 owing on our loan. So the first one will be 11 years. That's how long it takes us to have a principal of $100,000 owing on our loan for monthly repayments. However, for fortnightly, okay, you'll notice it's not as nice for us to work with. There's not an exact grid point for us to match up with. Okay, all right, so we draw down, you'll notice what tends to happen for our fortnightly repayments is that it's definitely after 7 years, but not quite after 8. Okay, so whenever we're using graphs, they're usually approximations. Okay, we're not getting exact answers if we have particularly like a graph with big grid points. Okay, so what we could say is we could say in this particular case, after approximately, and I'm just going to the nearest year, approximately 8 years. Okay, now the reason why I'm going for the 8 years in this particular case, all right, is just because I am closest to that particular point. All right, if I was close to the 7 years, then I could use that, but we were saying after approximately 8 years, there will be $100,000 owing on the loan with fortnightly repayments. Okay, now, if you're doing this along with me, it helps if you have a bit of a different colored pencil or texter or pen or something sort of help you sort of annotate these graphs, okay? All right, and so for part C, it says how much of the amount borrowed was still owing after 5 years for part I, so for 5 years with fortnightly repayments, so this one here. Okay, so we're going to be using the fortnightly repayments curve. We're going to do this in orange, so part C, I. And we want to find out how much of the amount borrowed was still owing after 5 years. So that's where we come across here to our 5. And we want to go up the fortnightly repayment, so all the way up until we hit the curve. And then what we want to do is we want to go directly horizontal. Okay. Now, if we've done this correctly, you'll notice that we land roughly in the middle of 150,000 and 200,000. All right. So what that tells us is after 5 years with fortnightly repayments, we were still owing around about $175,000, okay, on our loan as a rough approximate. So we would say approximately, so approx $175,000, okay, was still owed on the principal, on the amount that we borrowed, okay. Picking a different color, we might pick blue for this one, all right, for part II, okay. We want to find what happens after 10 years with monthly repayments. So using that same idea, so we go to 10 years and we go up until we hit the curve. And now we want to go directly across. And again, we're in this middle of 100,000 and 150,000. So we're looking at roughly 125,000 was owing at the 10-year mark if we were making monthly repayments. Okay, so approximately, approx $125,000. Okay, so all this question was about is just sort of understanding what's happening with the graph and being able to use your axes to go in both directions. Okay, to make sure that we sort of do that. All right, so now the next thing that we're going to do is we're going to have a little bit of a look at some of the terms that sort of pop up inside of a loan, and we'll have a little bit of a chat about that in an example too. Okay, so this is just a snippet from your textbook, all right, just in terms of everything with a bunch of questions that sort of come through onto it, okay, right? Often when you take out a home loan or a car loan or something like that, there's lots of little upfront costs that aren't initially a part of the loan, and it comes down often to things like legal fees, or in the case of a home loan or car loans, we have things called stamp duty, okay, and what stamp duty is, which we'll just put here, so stamp duty is often an extra tax, basically, that you pay the government when you're doing things such as a home loan. It can be reduced depending on whether you're a first home loan buyer or things like that. Okay, but generally it's a certain fixed percentage amount of the loan. Okay, all right. So the other things that we sort of want to look at here, and I'll just sort of highlight them as we go, we're sort of given in this particular question the interest rate. We're also given the registration fee of the mortgage. Okay, so that's sort of your legal fee just to register the mortgage with your bank. Okay, registration of the transfer, that's usually the transfer of ownership. Okay, so from one person, the seller, to the buyer. Okay, that costs money as well. The loan establishment fee, okay, that's another upfront cost that can happen. The big thing that I would look at here as well is the rate lock fee, okay? So sometimes you can be charged to lock your interest rate in at a amount that won't change. So some home loans can be variable or some can be fixed, and some banks will charge you a fee to lock your interest rate in at what it is, okay? So for example, your home loan fee now might be really, your home loan interest rate might be really, really good at 2%, but in a couple of years' time, it might jump up to suddenly 5%. Okay, so you want to try and lock it in at a good rate. so you're not paying extra on top of your loan. Okay, you'll notice that there's two different things: $750 for any house that's less than $1 million, or 0.15% of the total loan amount, if you're planning to lock it in for houses that are over that. Okay, so lots of other little things, including late repayment charges. Okay, so you want to be making sure that you pay it on time, and a loan service fee. And that basically, a loan service fee, all that is just paying the bank to maintain and have an account open for you. Okay, so let's actually have a little bit of a look, right, to understand everything that's going on. So Vaisner establishes a home loan of $500,000. Okay, the first part asks you, what was the interest rate that he is charged? Okay, well, that's nice and easy. The interest rate that he is charged is just up here. Okay, it's given to you right there. So A, he was charged 5.20% per annum. Okay, all right. Now, B, in terms of the total amount of charges that Vaisner needs to pay up front, there are lots of little things that go on here. Okay, so the things that he can be charged, we might do this in a different color. I might highlight in orange and write in orange for this one to make things different. Okay, up front, okay, he needs to pay for the registration of the mortgage. He needs to pay for the registration of transfer, the loan establishment fee, and if he was going to lock in repayments, okay, for a rate lock fee, okay, he would need to pay $750. Okay, it doesn't necessarily say that in this particular question, but let's just assume that he wants to have his rate locked. Okay, so his rate locked for this particular question. Okay, just to make sure that we're covering all of our bases here. Now, $750 because his home loan is only $500,000. Okay, so all of the upfront fees that he's going to go through and pay, all right, are $140 plus $272 plus $600 plus $750 for the rate lock fee. Okay, adding all of that up, his total upfront cost without stamp duty or anything else, just for the home loan, is $1,762, and that's just in legal fees. Just sort of have like your basic legal and bank fees. All right, your stamp duty can often cost extra. Okay, all right. So for part C, all right, he made late home loan repayments 2 months in a row. How much does his late payment and service charges amount to? So across 2 months, okay, if he's done it twice, we'll get a different color here. We might do this in blue. Across 2 months, he's had to pay $20 2 times. So his late fees is equal to $40. Okay, so that's occurred twice. All right, so $20 for 1 month, $20 the next. The other thing is his service fees. Okay, his service fees are $10 per month. Because this is across 2 months, he pays $20 just to have the account open. Okay, how much do they all amount to? Well, you just add them together, right? So your total amount in that particular case across your 2 months is just equal to your 40 plus your 20, which is equal to $60 across your 2 months, which is quite a little bit extra. If you're doing that every single time across the rate of your loan, you'll be paying quite a lot. Okay, all right, so this has been your home loan, like repaying a home loan, and understanding your different upfront costs that can sort of come in. Okay, and as well as understanding how your graphs work and using them. Okay, all right, just in terms of the structure and your little hidden fees, not necessarily hidden, but your little fees that can pop up inside of a loan. Okay, I hope you found this useful. Thank you very much.